Wouldn't it be great if we could just have like, I don't know, a fun Friday?
Hated it.
Would be nice, wouldn't it? Instead, we get this absolute madness. And unfortunately, we must declare that it is official that winter is here. Now, I've been laying out sort of the bull case, the optimistic viewpoint of what could happen next. And yesterday, we sort of got a warning, right? We got the warning shot. The warning shot was fired really close to our heads yesterday. And basically, the optimistic outlook was, hey, maybe it's a fake out. Maybe it's a fake out before a big move. A lot of times that happens. It wasn't. It was what it usually is. And that is that there are people who are privy to the information that's going to be disseminated to everyone prior to that. And they make moves. And it's been happening forever. And that's why the day before a big number drop, you see the market move. Most likely, we're going to keep moving that direction. We're going to look at a few different things today, try to get some perspective on it. Dow down 880 points today, so another big down day. I still got my NASDAQ short in place, and I'm going to hold it. It's puts through September, so I figured that'd give me enough protection to get around the corner. Hopefully it will. Hopefully it will. As we see, home buying has sort of, it has not come to a screeching halt. It's still very much a seller's market, but it's changing quickly, a lot more quickly than people expected. And what happened the last couple of days has caused interest rates to go up quite a bit. And I'll be looking at that. It's never good to really look at rates and price stuff on a Friday. So we'll take a look on Monday and see where does everything landed. And we'll actually pull up rates and we'll go through all that stuff. But for now, we're just going to take an overall look at what's going on and just realize that, all right, the most optimistic thing that could have happened didn't happen. So what? So now what? What should we do? Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Call, text me if you want to buy or refi. You can email me too. Cool with that. And emails are great.
Yeah.
All right. Let me get myself out of here. Let's get this out of here. Okay. So, stocks today took a bit of a ding. Not really a great day for investments. There are benefits to this. There are. And I'll tell you, for people who've been stockpiling cash because they've been afraid of the stock market, look at this. The 2-year Treasury, 3%. How about that? So for right now, you can go buy a 2-year and make 3%. And for some people that, it sounds like, well, hey, inflation's 8, I'm guaranteed losing money. Well, but it's still better than the bank. Still better than the bank. So you've got 3% right there. This is where I think a lot of the concern is coming from, and this is what I've been telling you about for some time, which is that the Fed has not done enough quickly enough. And so now they're talking about, making a more aggressive hike and tightening further. And that's never fun for stocks. It should be good for bonds, but it's not because of the fear that it invokes. And so we're going to take a look at that next. And then we'll look at some other charts. And we're going to try to, stay optimistic. We're going to look at some data too. I've got real estate data to share with you. Several things here on that front. Also, what I think you should do if you really want to make the best real estate investment right now. I think that is pretty clear. So we'll go through that too. So I didn't touch this from yesterday. I just left all my markings on there so we could kind of take a look at this same graph we were talking about. And remember this line right here that I drew, I said, hey, this line right here, this guy, that's the one we have to be fearful of. If we get below that, it's look out below. And look at how low we got today. At one point, we were almost down 100 basis points in one day. Now, we got a little wick there. Okay, there was buying up to 100. That's good to see. The initial value of these bonds is always 100. And everything is based off of that 100 valuation. So we bought it back up today to almost 100 right here. In fact, this hasn't been refreshed, so all this stuff, this price right here isn't even right because I haven't refreshed this at all today. But you can see where this is coming in. We're in no man's land. That is no man's land. We've been in no man's land for some time, trying to create form, trying to figure out where this market's going to be. Remember, we want to see these bond prices go higher. That means rates go lower. Look at what happened last couple of days. Okay, I'll go ahead and refresh it just so we can get a fresh look on things. Okay. Looks a little bit better here. So you can now kind of see like, okay, well, we had the opportunity to potentially double bottom here. That was really what we were hoping for after yesterday. Like that's best as it's going to get. Now we've broken through, and that former support is now going to be resistance. It's going to cause us problems. Even with this nice looking wick here, I think it's going to be tough. I think we have to hope for a new consolidation range, something like this. That's really our best case scenario for mortgage rates. So winter is here. What does that mean? That means that the recession is here. Whether it won't technically be here until July, but this time through, what's different, no one talked about a recession in 2008. No one was worried about it. No one talked about it. It just wasn't a thing until things got so bad. This time, there's so many eyes on it. So many people, just normal people who are just not even financial, consultants or talking heads on TV. Just regular folks know about what a recession is. They are looking for it. They're preparing for it. They're expecting it. We have way more awareness around what's going on now than we have in the past. And that is a good thing. That is a really good thing because the worst crashes and the worst recessions and the worst depressions all start by catching everyone off guard. And so hopefully you've used this time. You've used all the warning shots that I've been firing, and I've been firing them for quite some time. In fact, I shared one today that from Facebook, February 1st. And, and then the first ones were in April of last year. We started talking about hyperinflation is here. Here's what's going to happen. And so we've known all this was going to take place. So as we look at the market day to day, moment to moment, we have to always reevaluate, well, what is the temperature of the market? I like Altos Research. I've been using this same format. This is just a good place to go to get numbers that you can compare to the previous numbers that you've got. So whenever you're looking at data, you always want to look at the same data sources so that your comparisons make sense. If I'm looking at this one day and then I'm looking at MLS tomorrow and then I'm looking at some other person's stuff the next day, I may think that price per square foot has gone up, but the way they're measuring it might be different. So that's why you want to look at the same one. Now, we have a market action index of 85 in San Diego for Detached. And that's the lowest we've seen it. It's the lowest we've seen it in some time. I don't remember it being in the 80s much at all. If we go back here in the high 80s, it dipped down to like 89, 88.7. Not too long ago was that late March. Kind of dipped down into the high 80s. 85 is the lowest I remember seeing in quite some time. And so that's still a very strong seller's market. Very strong seller's market data. And what I'm looking at here is, so people who have been asking me like, well, what do you do then? Like, how do you invest in real estate here? I'm going to tell you what I think is the best thing to do. And I'm going to tell you why. And we're going to go through that data in just a second. Average days on market, you see, had still been declining though. Look at that. And just starting to round up a little bit. Just starting to round up. It bottomed out 19, 20, now up to 26. Median days, also a little spike there. Price decreases. This is something we've been watching. Have gone up quite a bit. So 12.5% in mid-February, now up to 29% of homes on the market have a price decrease. So that's just normal activity for a market that's trying to find itself, where we've had this huge run up in prices, and now we need a little bit of price discovery. We need to figure out, hey, with higher interest rates, hey, with a recession looming, now what are these homes worth? Now what are people willing to pay? And that's why it requires some price reductions. Relisteds have gone up, spiked up a little bit as well. You can see inventory here on a steady climb, 232 back in mid-February, now up to 554. That's San Diego City proper. Rents still climbing, but market action index is going down. Now, the biggest thing here, price per square foot, remember, this is the real barometer of the market. I mean, this is the thing that we're going to look at. This is when we're going to know if the market breaks a little bit, we're actually going to see it bend here first. And so far, we don't have anything like that to really look at, but we'll keep tracking this. They don't have anything that would signal the market has broken at all. And we don't have anything that actually signals the market has bent at all. But we do know, if you're working in this market, if you're in real estate, if you're in mortgage and you're working in this market, you know that there's been some shifts, there's been some changes, that the market is bending. It's bending towards buyers, which if you represent buyers like me, that's great. But most buyers don't embrace these opportunities. That's what unfortunately happens. And then we have a self-fulfilling prophecy taking place in the market. So look here, average price per square foot, 90-day average, $697. Let's go up to condos. Let's look at that too. Let's see how that looks. Okay, 90-day average, $671. So $671 per square foot is the 90-day rolling average in San Diego for condos. So you can right now, you can build an ADU for about $300 a square foot. So that's the best real estate investment I've got for you. And it might be the best one of all time, and it might continue to be for forever. You already own a home. You already own the land. You already have it developed. You've already got water there. You've already got sewer there. You've got so many things sorted already that are already paid for, that have already been worked out. And so now if you can build an ADU for this, just the cost to build, say $300 a foot, but you can add value to the property of more like $670, $700 a foot, that's an amazing investment opportunity right there, not to mention the cash flow you could get from Airbnb-ing that ADU or renting it out long-term or whatever. I know lots of people who are doing this. And so the question becomes, well, how do you finance that? You know, where do I get the money from? And dang it, I knew I messed something up. So I had a graph I was going to show you, and I totally forgot to bring it up. It is what it is. Right now, there's $11 trillion in untapped equity in this country, which is the highest of all time. And that means equity that could be pulled out of a home with a cash out refi, so 80% LTV or less, loan to value. And there's $11 trillion out there. And if a lot of people who have that equity, they're going, I want to parlay this into more real estate, I think this is probably the best way to do it. ADU, build an ADU. Now, what if I can't build an ADU? Well, then that isn't going to work for you. Or what if I could build an ADU, but it doesn't work for our lifestyle? Let's say, we have young kids, or we don't want strangers on our property, or just, whatever. You can't do it. Okay, I get it. But I'm just telling you, for real estate right now, the smartest investment, I believe, is an ADU. If you can't do it, you can't do it. No worries. Let's take a look at, I was going to zoom out on this real quick just to show you where we've come from. Let's take this back as far as we can go. Okay, so it's important to zoom out on these things. I know I'm zoomed in frequently on the bond chart, which is guiding us to where interest rates are headed. And when you zoom out, you really see, this is the breakdown. So it began, with this, hey, we're kind of downtrending now, to, whoa, we've got a pretty good downtrend going here, to, whoa, holy smokes. And this is what I mean by cascading down. And notice what happens at each new point. Whoom. Okay, so we didn't find where this market was. Like, we didn't have a stopping point until really April-ish, when we broke this downtrend right here and started creating some sideways action. So we are very early in sort of this price discovery process of where are rates truly going to land. If you remember, my prediction was 6.5%. We would see 6.5% be the average interest rate in the nation. Let's actually look this up. Let's go, Fred. New numbers published yesterday, and I forgot to check it. So let's look right now. Why not? All right, let's see. Where is this at? 5 point. Did it drop? Wow. So a week ago, we were at 5.3 average interest rate. And as of yesterday, 5.23. So if I'm right and we get to 6.5, we're going to end up somewhere up in here, but I really feel like that's probably the worst case scenario. And so that's maybe 1% from where we are right now. Some people are, this is an average, of course, it's 5.23, and it includes people paying points too. So, it's not, it includes VA loans, FHA loans, every loan that's reported through the electronic system. So some people will be getting higher rates than this. Like if you're conventional right now, you're buying a condo or something, or if you don't have a great credit score, let's say you have like a 706 or something where, it's not top tier, but it's not terrible. You might be getting in the low sixes already for a conventional loan. Whereas FHA, VA, there's more, high fours after the last couple of days, unfortunately. But we did have a good run there, good opportunity to lock, which we took advantage of. Hopefully you had the opportunity to take advantage of it. And if not, during this time when things were stabilized, now we're creating a new downtrend, right? This new smaller time frame cascading downtrend. We just got to see where this goes. I was worried about this on a Friday. Where do we go Monday? Why did this happen? Someone might be asking that question. Why did this happen? Let's see where they put it here on this. Inflation. This is what happened. So expectations for inflation were 8.3%. And if you recall, one of the things we were sort of kicking around was this idea that, well, what if the worst of inflation is behind us? What if, the worst aspects of this are gone? Or numbers are just going to get a little bit better, let's say, moving forward. Then that would be a big turnaround story. And this may seem trivial because we were expecting 8.3%, got 8.6. It's not that far off. But the fact that it's still getting worse is really defeating. And you could tell that this market believed that the worst was behind us. And you can tell because, let's take a look here at the Dow Jones. And we charted this downtrend here, which I expect to continue to hold. And it's held multiple times. It's been touched here on the bottom side. But you see these two big down days in a row. I mean, these are just really, really good indications that, the market was, first of all, yesterday, that there's people who are running the markets that are privy to the information before anyone else. And then today, that everybody's just saying, hey, get out of Dodge, sell, sell, sell. The gap down here will probably get filled. So I don't think this is, hey, we're going to wake up to like a Black Monday situation. I think that was 82 or 87. There was a crash on a Monday where the stock market opened 20% down. I don't think we're going to have that kind of situation here. I do think that there's going to be some stability, but you notice, and I called it this on Facebook at one point, a managed decline. It's what it looks like, doesn't it? It looks like a managed decline, which is exactly what it is. I mean, what the Federal Reserve is trying to do is manage a decline in asset values because they propped them up, and now they're trying to manage the decline. NASDAQ still doesn't look good. S&P is also still within its range here for this downtrend, this macro downtrend that we're in. So, all those things said, it still doesn't look good. I do expect that we'll have some worse days ahead. We can confirm that, a quick turnaround probably isn't happening now. The most optimistic potential outcome is not likely anymore, or pretty much, let's just call it, be straight off the table. Let's just call it what it is. And so we're going to have to fight. We're going to have to fight through this. I would reiterate a lot of the things that I've said about being smart with money, looking at expenses, tightening up, get high and tight. I always recommend that, especially probably in this situation. But expect that we're going to hear some more bad news. And what does that look like? Could be layoffs. It could be more bad inflation numbers. It could be economists, what was it they saying? Predict the Fed will hike. It could be some economists predict the market will crash. I saw some article that said something like that. The market's not done. The Dow will lose another 20%. Who knows that? You don't know that. It's ridiculous. I would like that person to disclose that they are short the market. That'd be great. But the fact that the Fed may hike 70.75, like I said from the very beginning, let's get it over with. Just however much you're willing to go, let's do it all at once. Just hit us with it. Just give it to us. I mean, come on. We know
it is your destiny.
You know what's coming. So let's just do it. Why are we messing around with all this ticky-tack crap?
All we want to do is pump you up.
Well, what happens when you have to let us down? You want to try to lay us down in bed at night real slowly? I say just drop us on the freaking floor. Let's go. Let's just get it over with. I'd rather have the time to get up, dust off, and move up. But this is just not their approach. It's just not their approach. They are not looking at it. And when I say they, I mean the government, the Federal Reserve. They are not looking at this like, well, how can we most quickly get to the promised land? In other words, how can we most quickly get into a position where people are winning again? How can we make that date as far to the left as possible? That's not what they're trying to do. They are trying to figure out the way to lay it down as softly as possible. And it's for the sake of, they would tell you, well, we don't want to panic. We don't want to hurt people. We don't want people to be caught off guard. We don't want someone to go into, a coma for a month and then wake up with no money. I don't know. They would give you some ridiculous excuse. The truth is, we want to get to the point where this is behind us as soon as possible. That right? Why aren't we acting like it? That's the problem. That's the problem. And will they change course on any of this stuff? Probably not. Probably not. We're probably going to get this little drip of it. It's like being starved, being so thirsty, and just getting a drop of water at a time. I mean, we are thirsty for some deflation, and the Fed is handing out nothing. I mean, just basically nothing. They've done nothing but talk. I mean, a couple raises, not much. Nothing to speak of. Hasn't made an impact on anything. Stuff's still getting worse. So if you are an investor, this is a difficult time. If you are looking for real estate investment, I still say check out the ADU first. If you are a buyer who's looking to buy your first home or buy an investment property, this is a great time. This is a great time to keep a close eye on the market. Watch for deals. You might catch someone desperate. You might get a motivated seller here, and they may not have a bid. That could happen. So there might be some deals out there to be had. It's possible. This hasn't been possible for years. It's now possible. So keep your eyes peeled. Be pre-approved. Be ready to go. And be ready to pull the trigger if you see something great. Why not? Why not, when conditions are better for buyers, do buyers run to the hills? It's so interesting, isn't it? But that's where we are right now. So I'm going to call it a week. You guys have an amazing weekend. I'll always be here if you need me. Call, text, shoot me an email if you want to buy or refi. Or just check the quote that you got. 2 times this week. Twice from this channel. People sent me information about the quotes that they had, and in both cases, we were able to save them money. So it's not every time, but most of the time, when people ask me to look at their deal, they're not getting the best possible deal. Almost every time. So happy to help on that front as well. If you need me, have a great weekend, guys, and I will see you again soon. Take care.